to welcome back Niki Nicolaou to moderate the session with Sara Enan of VentureSouq, Artem Nikulshim from The Alternative, and Andreas Ioannou of CommerzVentures to find out what's really turning the heads of VCs, and make sure to get your questions ready.
Hi everyone, thank you so much for staying behind. I want you to turn to your left, turn to your right. You guys are the stayers. Well done. I think it must be one of the death slots, the end of day. If you want to move forward a bit, because we'll make it a little bit more intimate. And we had a last minute drop off with one of our speakers, and Artem's joining us very last minute as well. So this is my script, and this is where it's going. And we're just going to open it up and be a lot more flexible with what we're going to be talking about. So firstly, I'm Niki Nicolaou. I am a director-founder of Contentworks Agency. We've been around for the last 7 years doing content, communication strategies for fintechs, finance, forex companies here in Cyprus, but also globally. And I'm going to ask each person to introduce themselves.
I'm Sara. I'm with VentureSouq. It's a GCC-based fund. We have a fintech fund that invests in early stage and growth stage companies. I'm originally Egyptian and I live in Egypt, and I love swimming and I do triathlons.
Thank you. Oh, it works. Fantastic. My name is Artem. I'm from The Alternative. I've been doing venture capital investments for 10 years. Predominantly in fintech and crypto. My first fintech deal was in 2016, I think, way before it became popular. Happy to be here on stage. Like investment-wise, we usually starting investing from seed to Series B, and then keep deploying capital in companies up to IPO.
Thank you. Andreas Ioannou from CommerzVentures. We are a fintech-focused fund, so we, as fintech specialists, investing at Series A and B, based in Europe, but we invest globally, and our focus is Europe, including the UK, Israel, North America, and increasingly Africa as well. The fund has been around for about a decade now. Has invested in category leaders such as Marqeta, the card issuer processing platform that IPO'd on the NASDAQ a few years ago, and we also invested early in eToro, as well as some others. So very happy to be here today.
So one of the advantages that we have with this collection of people here is that we're kind of covering the globe. And fintech is a wide topic, so what I'm going to do is invite each of them with their specific regions to talk about the kind of trends that they're seeing and the venture capitalists' focus of attention, and anything that is within the kind of fintech world that is trending at the moment. Let's start with you, Sara, over in the MENA region.
So the MENA region in general, the startup ecosystem is quite young, so starting with fintech was a core market for us. And since it's an emerging economy in Egypt and Turkey and Lebanon and Jordan and these countries, fintech is like one of the main solutions that we were looking for. B2B, enterprise, prop tech, fintech infrastructures, alternative credit is a big one. There's a lot of people that are unbanked, so financial inclusion was pushed by a lot of governments in the region. What else?
I guess, what are your kind of big picks as a VC coming up for the region?
Bigger bets. So actually, our bigger bets have been prop tech in almost every country that we've invested in. And we were just talking about one of the companies in Egypt. It's called Newi, because the mortgages industry worldwide is very popular, but in Egypt, their mortgages are 1%. Like 1% of population that takes mortgages out because it's very difficult. So when a fintech company comes and they're able to offer that as an asset class, it's extremely popular. So it's one of, like, while the country is falling, this is the one thing that's booming.
Right, interesting. I'm going to ask Artem about Southeast Asia. I think that's a region that you guys are very involved with. What are you seeing there? I mean, it's an area that normally I think of as being quite advanced with fintech, actually.
It used to be in 2021, as many other markets. Now, like the market dried out. So, like historically, what I've been doing investing in companies, usually from emerging markets, addressing global markets. This is the whole thesis. So, like to build a successful business, you need two components actually. You need to have large addressable market, and if you stay in Cyprus, there is no large addressable market. So, like if you a Cyprus entrepreneur and you're gonna be a successful company, you need more or less from day one, like starting product which will serve other markets. The second component is access to capital markets, which in turn comes with a network of your partners and with the potential of a business you're building, which again in turn, like if it's a global business, you have a different sort of potential. This way, like historically, we were one of the first investors of Rapid. Now it's the largest startup is in Israel, top 5 payment companies globally. Like Copper, we led the series trial in the company. This is with one of 2 largest crypto custody solutions, and quite a few other companies in this dimension. Last year, actually, I spent quite a lot of time like exploring the new emerging markets for me being like Southeast Asia, specifically in Indonesia, Philippines, Thailand, Malaysia, and a little bit African markets, to be frank as well. So a couple of observations. I think dealing with these markets, what I learned so far, it's extremely important to be on the ground, to spend time on the ground. Because everything you see like in the presentation, like you're opening nice reports from consulting companies or World Bank, like Indonesia, 300 million people, like growing population, growing GDP, well, just fantastic, mind-blowing, like the opportunity you can miss. When you're on the ground, you understand actually that out of 300 million people, real addressable market maybe 3 million in total. And the products which, again, you see on the ground, you think is actually needed for this market. They are not the same as the products you see in which people invested in 2021. And this was like very big learning for me. To be more specific, I think all these emerging countries, there's certain gradation of industries which can work out there. So like the basic model, the basic level, it's payments. Everyone needs to have like sufficient payments methods without delays. Like in Philippines, payments can not, basic cases when the downtime in the national payment system is a couple of hours. So if like it's a little bit more developed country, people start having a little bit more money, they need a bank account. This is, for example, like Indonesia. And only when they have bank account, they start needing maybe credit, for sure. Credits, they go like together with bank account. And later on, investments and insurance. However, like if we see like the structure of companies which were invested in these markets, it's flipped. A lot of fintech insurance companies got funding, a lot of capital market companies got funded, while like they need resolutions for very basic problems at the moment.
That's interesting. So while Sara was saying for MENA, we're talking about prop tech, in Southeast Asia, we're talking payments. That's kind of one of the key trends that has been there for a while, but is obviously continuing. Yeah. What about you, Andreas? Tell me about, I mean, you're based in the UK, right? But you're involved with Europe, and I think also you might have mentioned North Africa. Is that right?
Yeah, that's right. Actually, I just wanted to pick up on something that that you said. I think, again, time and again, we see payments as such an enormous market. And I still think, or we at CommerzVentures still believe that there's huge opportunities within that particular space. Something that we've been looking at quite carefully in the recent past is how to leverage stablecoins for cross-border international payments. I think that's an enormous opportunity because again, like time and time and again, we have seen that if you decrease the time to money for people, whether that's for consumers or whether that's for businesses, you can generate enormous value, right? And I think sort of Stripe and Square were for the first companies that rode that wave, and they did that for the merchants, and then you had kind of Cash App, Venmo, et cetera, to do that for consumers. And then more recently, in Europe in particular, you've seen Monzo and N26 and Revolut do that for consumers, and with a wedge for peer-to-peer payments, and then expanding into other banking services. But if you think about cross-border payments, it's such an enormous market, and at the moment it takes maybe 5 days, possibly even more, to send an international payment through the SWIFT banking network or correspondent banking network, whatever it is that you're sending it through. And there is a promise to reduce that time from 5 to 7 days to maybe a day, maybe even less, through stablecoins. And we think that there is enormous value to be generated there, and it's definitely a space that we're sort of looking at particularly closely.
So payments obviously still very strong. Where are the green fields? What are the new opportunities?
Well, I think within that space, greenfield, what we look for is within business, like business-to-business payments. I think that's a market that still has yet to be really kind of pierced by the cross-border stablecoin.
I always thought it was quite saturated as a market, no?
It is segregated, but at the same time, I think, again, if you look at how that patchwork of international payments works right now, which is mostly SWIFT, there are some others, but mostly SWIFT, it takes a very long time for me as a business in, say, Canada or the UK to pay my supplier in China or wherever it is, right? And if I'm able to send that payment much, much quicker, we think that will support businesses with their cash flow. It'll support businesses with like less amounts of debt. There's so much, I think, that can be done there, and it's definitely something that we're looking at quite carefully.
Sure, and of course, your options like SWIFT are something that people can obviously step in and interfere with as well. So maybe people are now looking at sort of wider other options rather than just SWIFT. If you were to invest in a company, what is it that you would be looking for?
Gosh, it's a good question.
I'll come back to all of you. You've got time to think about it, Andreas. You want time to think?
Maybe I'll start. I mean, I think the one-liner is that we are really looking for category leaders. We are a venture capital investor, and the way we think about it is that we're quite disciplined when it comes to the power law, i.e. the vast majority of returns in this particular industry that we're playing in are generated by a small number of companies, right? And if you look at our successes in the past as a fund, that is certainly how it's played out. So we're looking for transformative change, really, and that would sum it up in a line. I mean, there are so many things that we can talk about. The market has to be large enough to support billion-dollar exits, etc. But category leaders is how I would summarize it, certainly.
What about you, Sarah?
About which companies? What I look for?
What do you look for, yeah?
Yeah, specifically in the MENA region, we really look at the type of founder and the team itself, because you really, really struggle to operate in our countries. Like, you are always facing a lot of challenges from the regulations, the customer behavior. Like, you're always like, it's not very easy to set up your company. Like, every day is a challenge. So we really need someone that's extremely resilient. Like, they won't give up. They can weather the storm. Even when the fundraising is extremely difficult, they can figure something out. They can be a hustler. So we'll invest in the founder itself, and the idea can come later.
Right. Artem?
It's a very good question. I would love having an answer, but it shapes over time what we are looking for. I think traditionally we are moving across the triangle: product, market, team, and all the time, like, the decision shifts towards one corner or another corner. My personal view: we invest in people, so we are looking for people who know how to build the business, how to execute, how to scale in large markets.
All right.
This is the best company for us. We've been doing that for quite a while. Investing maybe sometimes we can call it serial entrepreneurs, but in fintech, actually, there are like a lot of entrepreneurs who are not like startuppers, who like build, people who build real business before.
All right. Now, one of the things that's been kind of a trendy word that we've been hearing a lot of is ESG, environmental, societal governance. How are you dealing with that in the MENA region, Sara?
Yeah, there's definitely like a lack of awareness, and we're trying to implement a lot of ESG policies, and we're trying to encourage our startups. And one of the companies I talked to, when I mentioned to them like, oh, like, do you have any ESG policies in place? And they're like, what's ESG? They don't even know the acronym. Like, how many female founders, how many females do you have employed in your company? We're not keeping track. So like even the very basic metrics of anything from the SDGs or anything that we all know about here in Europe or globally in the West, we don't know about it in MENA. The founders don't know about it. Like, they have so many things that they're trying to achieve before incorporating ESG. There's a huge opportunity for companies that implement ESG policies now, because then they'll attract investors that are conscious investors. They'll attract VCs that also have their own mandates to have ESG policies. They'll start tracking things that they should be implementing. We'll invest in companies that are providing opportunities for women that are unbanked, or they're providing financial literacy in like specific rural areas in sub-Saharan Africa or in North Africa or in emerging markets in general. So these are all opportunities that like pop up as like immediate wins.
I mean, we're definitely seeing a lot of greenwashing that's been going on, and a lot of people seem to think that the ESG agendas are very much a tick box that they need to meet, especially if you're based in Europe, and I'll ask you about that in a second, Andreas. But I think it goes beyond that. I think what it does is it actually says we've been serving a small percentage of the population. There's so many untapped potential over here.
Oh gosh, yeah. So there's two parts to that question. I think the second part, and Sara, you touched upon it. Something that we look for in particular when we're investing in Africa is technology has just an enormous ability to massively decrease the barriers to entry for financial services for underserved people, right? Almost uniquely. And when it comes to business models that can incorporate ESG, I think if you are able to if you're able to leverage technology in order to bring financial services to a group of people that have never seen financial services potentially, or struggle to gain access to financial services before, that's potentially a huge unlock, right? We recently invested in a company called Sabi that's based in Lagos, actually, but it's Pan-African now, that is a B2B marketplace for the informal economy in Africa, right? In short, it's sort of building the Alibaba kind of for Africa. I think that's an easy way to describe it. But what it's doing is it's through bringing all those informal businesses online, right, which were previously totally offline, right? The supply chains were fairly broken. There was enormous amounts of friction. Bringing them online so that you facilitate much easier exchange of goods between wholesalers and distributors in the informal economy, and then using that, you can then sell financial services to those individuals, whether it's through payments or whether it's through credit, is a massive unlock for the economy,
so
right?
Is it like the African version of Temu?
But specifically for businesses, so
right.
Closer to Alibaba than it is, right?
More Alibaba, so
but exactly
right.
that, right?
Yeah.
Exactly that. And we think that is incredibly exciting, right? Because I mean, the size of the informal economy in Africa is sort of $800 billion. It's an enormous market, right, that is currently totally undigitized, and has a huge amount of potential there. So that's one thing. On the ESG kind of policy front, right, which I think is a really interesting question. You have seen the challenges. It's funny that you say the challenges that you face in the MENA region is like, where do we start? And funnily enough, I think we see quite a lot of the same in Europe as well,
right? A lot of companies that come to us from a governance perspective and go, hey, listen, I want to incorporate some ESG policies into my corporate governance, but I have no idea where to start. And that's a real issue. And secondly is the issue of standardization, I think, right? It's very difficult for companies to know what to report on as standard. That is potentially why you get a lot of greenwashing as well, that you sort of hinted on. But I think more recently we're seeing, at least within the European Union, quite a lot of progress on that front. There's regulation that was passed just last year, actually, known as CSRD, which is the Corporate Reporting Sustainability Directive, that is going to require, I think, over 50,000 companies within the European Union to report on over 1,000 sustainability metrics, right? And it's standardized all of them. And hopefully that should give a whole load of guidance to those companies as to how to get a handle on how to do this thing, right? It's part of their overarching theme for the European Union to reach net zero by 2050, right? But I think it's a huge step in helping companies understand what they should be reporting on and standardizing that framework across environmental and social governance, yeah.
So Tim, and what about ESG in Southeast Asia? And correct me if I'm wrong here, but it's quite a young population, right? It's younger than Europe and the US. So is ESG a topic that sort of gets discussed?
It's a very good question. To what extent? So I think for an investor, it's very important to understand what you know and what you don't know. And in the areas which you are not that familiar, partner with right partners. So I'm afraid ESG is these areas where I prefer to partner because it's not standardized, so true. Well, like very high level taxonomy on what like ESG objectives. But there's no like way how you calculate it, and there's a lot of greenwashing, ESG washing. It happens all the time. So we let like our partners, like our founders, to decide how to deal with it.
Okay, excellent. Okay, let's go straight to let's wait for the questions at the end. Tell me about AI. Not you. It seems to be on everybody's
Currently,
lips.
AI is taking over our jobs. They don't need us anymore.
As a venture capitalist, is that an area that's really tweaking your interest? Are you is it all about AI, or is it overrated? Is it not there yet? Anybody want to take that one?
You're the youngest.
Yeah,
Okay.
I mean, maybe I'll start with something that's potentially slightly different to what you'd expect. I think obviously we are thinking very carefully at CommerzVentures about what the impact of Gen AI is going to be on financial services, and generally speaking, we think there is going to be a huge impact, right? I think these things are only getting better by the year. I think there's a lot more room to run when it comes to scaling up language models and making them kind of summarize, do something akin to reasoning, whatever it is you want to call it, over unstructured data. Something that I'm particularly interested in, though, is, funnily enough, the downstream effects of generative AI on financial services. I was actually at home over Easter. I have a younger brother who's about 20 years old. Unfortunately, he is much smarter than I am, but he whips out his phone and he goes, "Oh, Andreas, give me a random sentence," and I'll go, "Okay, fine, whatever, like the quick brown fox jumps over the lazy dog," or something, and he will type that into his phone, and it'll repeat it back to me as if it sounds like me, which is crazy, right? It's so easy now to take someone's speech, maybe a minute or two of someone's speech, and then train an LLM to sound just like you. And I think that has enormous implications for fraud, right, going forward. I think we are facing a massive wave of fraud, particularly within financial services, thanks to the technology that is proliferating through generative AI. So something that we're thinking very carefully about is, well, how are we going to tackle all of this fraud that is very soon going to be upon us, if not already upon us? And financial services, financial institutions, I think, are thinking very carefully about that. So that's something certainly that we're looking at quite closely.
All right. Tim, what are you seeing in Southeast Asia around AI?
AI? it's a good question. I think AI, first of all, any technological solution makes more sense when it can, when you have expensive, high salaries. When the salary is low, a lot of processes which, for example, make sense to automate in the UK, in many countries like Southeast Asia, like Indonesia, Philippines, it's not applicable. We're just not at this stage when salaries are as high that we need automation. Actually, how a lot of these European and American companies building AI do, they have like some outsource offices in Philippines, Malaysia, like in the region, with people helping the systems to train and to deal with mistakes of the systems. I think that's my personal view that the market is not there yet. So because when you need to deal something with more basic things.
Yeah, yeah. All right. Well, thank you. I've got 5 minutes left, and we've got some questions. Sara, is there a question you want to answer?
I mean, the concerned VC employee. I'm a concerned VC employee too.
Is that the last one?
Yeah.
How your VC is financed by your own company, by your own money as founders or outside investors? And if outside investors, what is critical for them when you invest their money?
So our VCs, we have LPs. They're mostly sovereign wealth funds from the UAE and Saudi, and we have family offices and high net worth individuals from the GCC, which is the Gulf. We typically don't fundraise from DFIs, or we still haven't done that, and a big part of it is because of the mandates that they kind of impose on you as you're investing. So maybe our main mandate is to put more money in the GCC than other countries, but we have more flexibility on how we're investing our money.
What about you at the alternative, Artem?
The same question?
Yep, same question.
So we have roughly 300 investors. It's a big number. They are working with predominantly entrepreneurs, actually. So it's a very common situation for us when you invested in the company and at the same time the founder of this company invested like in a couple of investment products you have or funds. So, and what's more also important, I think we like employees and founders, we also invest in the same deals. So we have quite significant, like I personally have been investing like a lot for the fund, and I think it's skin in the game is very important on two sides. It means that when you are putting your money in what you're doing, you are fully aligned with the people with whom you partner, with the founders and investors.
Okay. Andreas, what do you think about getting the one on how can startups effectively navigate the challenges of scaling their operations?
Yeah, it's a good question.
It's a big question, actually, so you've got 3 minutes.
Yeah, oh gosh. I think one of the important things, particularly for fintechs, really is understand the regulatory landscape when you're moving into other countries. It's quite different, like as a fintech, to scale globally than it is for an enterprise SaaS company, right, where you don't have to worry about the intricacies of regulation. It's something that we think is particularly important is if you're looking for strategic support from your board, particularly your investors that you have, we think there's huge value add for you to have fintech specialists on your board that have been there and done it before, understand the regulatory landscape, right, that comes with expanding into France or expanding into the UK or wherever it is that you're going. And to help you navigate that, because it is a challenge. It's much more difficult than pure software, but it's super important. I think having those investors that have been in the space before and for a while to support you on that journey.
Just to add on to that, I think it's very important to also be very selective on the countries that you're expanding to have something that's a country that's very similar on a macroeconomic perspective rather than a country that's closer geographically. So Egypt and Pakistan, for example, are very similar economies, so it's a very clear expansion plan versus Egypt and Saudi. They might speak the same language, but the economies are extremely different. So it doesn't make sense to make that type of expansion, and also to have boots on the ground, to have people in these countries that you're expanding to. And if you can't have people on the ground, to look at acquisition opportunities, like if you can acquire a company there as a way to enter this market and expand operationally there, then do that over trying to go in yourself and losing a lot of money trying to do that.
That's a really good point, and I'm going to talk to you about that a bit more later. So we get down to our last minute, our last question, and I'm going to ask all of you to answer it and give us some 1 or 2 word answers on this one, which is, which fintech trends are currently most attractive to investors? And if you want, you can add the why, but you've got to be quick. Let's start with you, Artem.
Okay, I'll name one trend which is particularly interesting for me. So I think over the past couple of years, like because of crypto and because of COVID, a lot of people actually start trading, keeping their assets, like investing their assets in, I don't know, like 2 years ago, what is money market fund for many people was not familiar at all. It's still not familiar for many people, but those who live in Europe, in the UK, in the US, they know like the current interest rate is 5%, and actually they can get direct exposure to this money market funds. I think it's a major shift happening across different levels. Asset managers like Fidelity, they are testing literally hundreds of applications of LLM models on their business model. Like public companies. Public companies are facing the problem that, okay, now a big chunk of our investors are actually retail investors, and they're an important part of our cap table. What we should do, because they can talk with them as we do with investment analysts. If we go into infrastructure level, retail investors, small ticket, the infrastructure should be more efficient. How we can lift up the quality of infrastructure so we can deal with small retail investors. I think this is a very big area I'm personally like exploring at this moment.
All right, I think our time is up. So if you want to get the answers from the other two, you'll have to corner them afterwards. Thanks very much for staying behind, everybody.